that sound means we are now live here on our YouTube channel, Tackle Trading's Halftime Report, our daily show where we go through the stock market one step at a time, look at all the charts, the information, the economic news that's kind of come out over the course of the 24-hour period, analyze it, break it down, give you guys some insight into the way that we're seeing it, interpret it, and reading it. Welcome out to our show here on a Tuesday. It is the first day of December 2020 here, last month of the year. We had a great month of November from a stock market perspective. In fact, the Dow had the best month it's had in 33 years, I believe. Pretty impressive performances. And we're starting this month out on a bang here, a little bit of an update. Nice 1% gains across many of the indexes. A lot of big name stocks are actually doing pretty well today. We'll analyze it one step at a time as we go through it. As regular, we've got Noah here on Tuesday. It is Tuesdays with Noah. Let's start with you, Noah. How are you doing today, sir?
You know, Tim, there's no place I'd rather be. I'm excited to be here today.
Very fired up to have you, and thanks for joining us. I know you were up late doing the webinar last night for Team Tackle. I do want to talk about that in just a second. If you are joining our channel right now for the very first time, welcome out. We do this show each and every day. Whenever the markets are live, we go live 12:30 p.m. Eastern Standard Time for about a 90-minute show where we break down the markets. If you're a veteran of my community, hashtag Team Tackle in the chat. Click the thumbs up there button there. Let's get the analytics up, get the word out on our show. Today, we're going to be talking about some Cyber Monday data. We've got some updates around fiscal stimulus conversations about unemployment extensions at the end of the year, some micro deals that might be happening, more rotation conversation about the markets and what's happening here. We're seeing tech making a little bit of a comeback the last couple of days. We'll get Coach Matt's take on any of those thoughts as well. And we had a podcast yesterday that was a lot of fun called the Dow 30 Draft, where we had 5 different coaches go through each stock in the Dow and make picks one at a time. A lot of fun on the podcast. I really enjoyed it. We'll have a conversation about that towards the end of the show, and Zoom earnings, Exxon Mobil news, Moderna news, much, much, much more. Welcome out to our show. Actually, you know what? One thing I do want to start with before I bring Matt in and get too far into the analysis is last night's webinar. And if you can go to tackletrading.com, I just want to talk about it for a minute. I thoroughly enjoyed it. I woke up this morning, like I do many mornings, going through my morning routine, coffee, up early, going through my steps. And one of the first things I did was review last night's webinar today, Noah, and I watched it. And it was just really, really enjoyable watching you teach those students. Talk about it a little bit and what you taught and what you did.
Well, we had a lot of fun. First of all, we had a good group show up, which is always nice. And, we started out just by highlighting the holiday promo offer. We've got that Cyber Monday special we've been doing for the last several years. We really only do the big sales events twice a year, usually at the holidays and 4th of July. And so we had people showed up just ready to get the sale. They wanted to get the pro annual, get the step system, and just kind of be on their way. We had other people stick around the whole time. What we actually did is we used the Tackle Pro membership features and functions to go through and find trade. We started out going through the newsletter. We had the entire kind of group participate in the process. We went through, looked at the sectors, identified, what sectors were hot and not using the newsletter, looked at some of the information that was provided there each week. And then we moved on into the scouting reports, and we went through and we identified candidates, and again, got the community to feedback, and we all kind of, put in which ones we liked the most. And we ended up planning and placing a couple of trades together. Again, just walking through all the steps and processes. We highlighted and featured the step system, and we used the general rules and principles and discipline that the step system creates. And we planned and placed a trade around that. And then we cracked open the playbook, Tim, and we put together a bull call spread on a nice little breakout from the watch list on the options report on PayPal, which is broken out and doing pretty nice this morning. Mm-hmm. And so we had a good little deal. And then we made the offer again at the end of the webinar and had people sign up, and quite a few people took advantage of it. And we got the recording live on YouTube, so you can go back and watch that. And I'm sure that Cody could pop the link for that in the chat so people can copy it and paste it and watch it later if they didn't get a chance to watch it last night. Mm-hmm. It was a great time. And I think we were able to drop some knowledge while we were at it. And we had, again, a really good little group show up, and I enjoyed it.
Yeah, a couple things on that. Number one, the recording link is on the front page of our YouTube channel. As always, you can find it as the first video, and Cody just dropped the recording link there. So yeah, after our show today, at some point on a Tuesday, I would sit and I would go through that 75-minute presentation, watch Noah, really think about some of the examples he used and the importance of of the education side as well. And then this holiday special that we have going right now, obviously here's the page, the store page we have, a couple real simple things. And Noah, you did a great job explaining the value of this. I think anybody out there watching our show right now who's Team Tackle already understand this. And it's something, obviously very important to us. You got to commit to education. There are two very, very specific products we chose here to promote during our holiday special. One is our Pro membership, which is an immersion program that's just chock full of all kinds of different stuff, a playbook, the courses, the weekend reports, all of those types of things. But this step system, I was having a conversation online today, Noah, with a student who's interested in our community, who's not yet a member. And they were messaging me privately and, via chat. And they were saying, well, maybe this is just too advanced for me, or maybe I don't know how to build these trades yet. And I got to, see some results before I get into it. And I was very blunt. And I said, listen, if you don't put education first to actually learn how to trade, you're not going to just jump in the market and trade profitably. That's not the way that it works, right, Matt?
I need to see some results.
Yeah.
All right.
Yeah.
There's an old philosophy in the market. You're going to pay your tuition one way or the other. You're either going to do it through proper education, like most human beings do, or you're going to do it through, having some skin in the game and paying that tuition to the market by, learning what not to do. And I don't know of a cheaper option with higher quality coaching and higher quality content with better systems than what Tackle Trading has. An annual pro with everything we do in the pro, with the step system for $14.97 for new traders learning how to trade, you're not going to find a better deal with better content in this industry. It's not going to happen. So what I would suggest is put education first, application second, and that's the combination to achieve success, in my opinion. It cuts the time frame down. The thing about the financial world is we're not taught this as we're growing up. It's such a foreign language to us that it becomes very, very confusing. And one of the biggest skill sets that you need to learn as a trader is how to navigate the landmines in the market that are coming at us that really nobody talks about until they happen. And then everybody talks about it after the fact, right? You got to learn how to navigate those things. And in my opinion, having that skill set, surrounding yourself with a community of experienced traders and people that care about one another, navigating this market together, just ask any one of our pro members. They'll tell you this value is insane. So, I think it's a good value. I think people love it, and I would strongly recommend you guys test it out if you haven't given Tackle Trading a try yet.
100%. And one last thing on this note here, Noah, I love the line you used in there early in the webinar where you said you need to learn to think and act like a trader. And the only way that you can do that, and I'm paraphrasing now, but basically you said the only way you can do that is if you put your butt in the seat and you study, and then you also practice and apply what it is you're learning. And I thought it was wonderful. A couple of very simple offers, guys. There's a bundle with both of these things in it for $1,497. The annual is on sale for 23% off. So if you want the pro, you want to re-up the annual, get that price locked in that we do over the holiday special. And then the step system is 50% off. So if you've never taken a real technical analysis course, this is a fantastic place for you. And if you're a trader that needs to bone up on your skills, your rules, all that kind of stuff, I definitely would do that. So loved it last night, Noah. Great job.
Well,
go ahead.
I thought I should inform you guys. I also might have accidentally suggested that if they were to email Mark at Team at Tackle Trading, they might also get holiday pricing offers on the cash flow condor,
CFO,
the Tackle 25.
I love this conversation right now.
Is he Santa, Mark? Okay.
I love it.
So I suggested that they might email Mark and that he probably would be in a good mood and take good care of them if they were interested in any of the other products.
Mark literally lives by one philosophy. I would rather ask for forgiveness than ask for approval.
He does.
That's the one philosophy Mark lives under. And I've been a part of that philosophy long enough to realize that I can't even get mad at him anymore. And I hate it.
Just who he is.
Well, that's how we were rolling last night. And I think people appreciated it. And I even had people in the chat say, yeah, go ahead and email Mark. Trust me, it works. So.
I know it does. He's like, okay, yeah, I'll give you 45 days free. It's great. You do whatever you want. And then yeah, whatever. I'm good.
Yep, absolutely.
Whatever.
Yep. All right, let's get into the analysis here today, guys. Let's break down the markets one step at a time. Let's go to the charts first and start with the S&P 500. Noah, whenever we're here with you, I always want to start with technicals, just to kind of have you break down the charts for us. One of the best technicians that I know. Can you give us a technical read here on the market?
Yeah, I mean, it's a really nice looking breakout at this point in time. And we were talking yesterday about that red candle kind of coming down. It tested off the 9. And during periods of the day, it looked a little bit more bearish. But by the end of the day, you had that long shadow. And I had a sneaking suspicion the market was going to continue to break and retest that high. And so it's right here, just poking its head up above that previous gap up high that we saw on the initial news of the vaccine, which again, it kind of backfilled that gap. But you got that big, upper shadow. And so we're up there again, poking our head above that. It's going to be interesting to watch the close. You got clean air up above that. So, poking up and making that new all-time high today on the S&P is certainly, I think, of note. You also notice the volume kind of tapered off a little bit below average while it consolidated sideways. It's really, really typical to see light volume, Tim, over that Thanksgiving holiday, just because people's attention turns. The market's closed on Thursday. The Friday trading session's almost always one of the lightest trading volume days of the year. And didn't really move much, which is to be expected. And so coming into the Monday, seeing again, kind of the test off the 9 and poking up to a new high today, I think bodes well for the bulls.
Oh yeah, absolutely. There's no question it bodes well for the bulls. The question I have for you, Matt, is this a breakout? This is pretty close to that exact tick that we tried on what was that, Pfizer Monday, that we had there?
It was Pfizer Monday.
Pfizer Monday. Is this a breakout yet?
It honestly goes back to the age-old conversation of, do you care about the wick or not? Mm-hmm. And I always like to put those wicks into some degree of context, honestly, because not all wicks are created equal here. When you have a wick that just gaps up on the market open, then comes right back down into normal price action, I have a tendency to discount that wick a little bit. And when there's only one data point up there, I also have a tendency to kind of bypass that one data point as well. Now, when that one wick coincides with some other analysis, like the high base we're looking at right now, then you have to take it into account. For me, I said this literally on that day, I'm discounting that wick. Like I am. That was vaccine news. That was the market gap up. And then obviously we came back down to earth, right? I'm discounting that. And I've discounted that wick the entire time. And because I do discount that wick, and other technicians would disagree with me, right? But because I personally discount that wick, I'm calling this a breakout with confirmation if you close above the high base. And so if you do close above that high base scenario, yeah, I would call that an official confirmation, even if it hovers underneath that wick, right? Because then you would just treat it as a little bit of a continuation. But you close above what, 30, let's give it 36.68, 36.70. I do think you have to call that confirmation.
Yeah, I agree. I mean, I don't know.
Especially with the context surrounding why the market's going up today.
Yeah. Yeah. I mean, in general, it wouldn't affect my ranking too much, whether or not it does close above this or not. Maybe a little bit of an upgrade by the end of the week. We're the second in the week, though, and it was already pretty strong. I've been bullish coming into this week. So a breakout, sure, you'd upgrade it maybe 5, probably.
It's not even a debate. You break out, you obviously up 5 points. You obviously get a little bit more bullish.
Mm-hmm. And I just generally love this S&P setup, especially on the daily, but also the weekly chart. I mean, we're pushing these highs consistently for some time. We've been playing defense on down days, and we are up. And there's some interesting information here in the market today, Matt. One of the developing stories over the last 6-8 months, actually, through all of this, has been around fiscal stimulus and government actions that were going to be passed. We got the CARES Act earlier in the year. We've got a lot of Fed policy. Jerome Powell is on the Hill testifying. Stephen Mnuchin will be there as well. And I believe it is the Senate Banking Committee that they're talking to today, literally about fiscal stimulus and all that kind of stuff. And there's been some chatter, Matt, 30 Democratic senators, some senators from the Republican side coming across the aisle, talking a little bit about extending these unemployment benefits.
There's some bipartisan action going on.
Yeah.
Finally, for the first time in a long time, some bipartisan activity actually going on right now.
Mm-hmm. And Matt, there's
12.
it
is 2020. The craziest things can happen.
Right. We can
the end of 2020.
Something done. Yeah. Well, at the end of 2020, there are some expiring unemployment benefits for 12 million workers, and that's why both Republicans in the Senate and Democrats in the Senate are at least starting to talk about doing some kind of an extension here, Matt. This would be a little bit of a micro dose of a deal, almost some like small little caveat within fiscal stimulus. But it's interesting, no, and you kind of had this. You've been talking about how things would get back to normal. Business still needs to be getting done. Mitch McConnell's talking about how stimulus is his number one priority. Now we're seeing the chatter. Matt, what's your read on stimulus and what's what we're seeing here today?
Tim, after in the post-election analysis, I really kind of felt like that Democratic wishful thinking of getting that 2.4, 2.2, that 2 trillion plus number in one bill, I thought that was a pipe dream post-election. The Republicans, I felt, had a very good showing on election night, especially on the down ballot. They held their ground in the Senate more than a lot of people, including myself. I thought Democrats would get to 51. It does look like Republicans are going to do better than that. They did better in the House than anybody expected. Like literally, they did very, very, very good in the House. Mm-hmm. And I just felt that kind of shifted the negotiations that was going to happen there. And I kind of felt like the Democrats and Pelosi and this is just speculation on my part, obviously, but I kind of felt like they just didn't have the negotiation power at that point to hold out for that big deal. And so I kind of felt like there was going to be a little bit more bipartisan activity on micro deals. And, that's what Democratic Senator, Mark Warner of Virginia said today. He was talking about this bipartisan, stimulus potential deal that that includes $908 billion. It's amazing to me. 12 years ago, we did the biggest stimulus package that we've ever done, and that was $750 billion. And that was a major, major, major action. We're calling a $908 billion stimulus deal a micro deal. Senator Mark Warner literally called it an interim package today. And so it just the times we live in, right? The times we live in. But I do think that, even though you'll hear a lot of just political talk, I do think you have some actual movement here going on. And when you're talking about this stimulus deal, and I kind of feel like I've been on an island with stimulus lately, right? The entire market's kind of moved from stimulus. Oh, we're not going to get stimulus. We're not going to get stimulus. Everybody thinks it's going to be a nasty environment. I actually do believe it's going to be a better political environment. I do believe that, and I could be wrong, but in this deal, $298 billion to further PPP loans, $160 billion. And again, this is a bipartisan deal. Most of the deals we've seen in stimulus have been proposals from Democrats or Republicans. Right now, we're talking about a bipartisan. This is a little bit different type scenario. $160 billion to state and local government funding, $180 billion to fund further enhanced employment benefits, and that would not be the $600. That would be the $300 that they that Trump did the executive order. When was that? About a month ago now, or 2 months ago? I can't remember exactly. Yeah, it was about 2 months ago now. $16 billion in vaccine distribution, $45 billion in educational expenses. I think it's a good starting point, honestly, and you do have bipartisan support there. So looks like stimulus is becoming a part of the theme again, Tim.
Mm-hmm. And if it is there, and by the way, I think for me as a market participant, I've assumed stimulus was going to be in the deal at some point in the future as well. But obviously, getting it back in the news headlines is important.
One thing to keep in mind is, the new Congress does not take office until third week January, or first week January. But Mark Kelly, the new Democratic senator from Arizona, is getting sworn in this week. And so that does change the current dynamics to maybe get a little bit more bipartisan support within the Senate, because Republicans do lose one vote this month in comparison to what is going to happen in January.
Noah, what's your thought around stimulus? Obviously, I mean, I believe I know your concerns about the ballooning national debt and all of the impending doom that eventually that ends up falling into, but that's way down the road, bro. We can deal with that later. What's your thought right now on market conditions and what it might mean for the bullishness potential of this market if we do start getting stimulus headlines, a stimulus deal, and some money back in the market?
Well, it's a good question. I think the concern over the ballooning debt's a ship that's possibly sailed as far as debt to GDP numbers and things of those go. It's an interesting new place to be in, I think, and we're kind of embracing the modern monetary theory. Again, it's an experiment that I think will be interesting to see how it plays out, because there's one camp that really thinks it's going to work. And then there's the other camp that thinks it's, kind of untested and probably foolish. But I think that the market's going to continue to go up and they're going to continue to devalue the dollar. So the big question I have is, along with the stimulus, the thing that we have not seen is inflation in certain areas. You're seeing it in some areas, like you're seeing it in asset prices. You're seeing it in real estate, but you're not really seeing it in the cost of consumer goods as much. And so, you can argue whether or not you're actually seeing any sort of inflationary pressure. And so I think they're just going to keep on doing little stimulus, and then the market's going to keep looking for that little treat like a dog. And the pattern is probably going to continue at some point in time. There might be a fast reckoning like we saw, like we've seen in the past, where you get these really rapid, fast down days, but then the market recovery tends to go back up pretty quick. So I'm just expecting, average bullishness with every once in a while you get those sharp downturns.
Listen, I mean, this is a theme that's been going on for 12 years here, Maddie. The markets like fiscal stimulus and they like monetary policy that's soft and, accommodative and all that kind of stuff. It feels like we're moving back into a transition where we might be getting some of those headlines, some of that news. And obviously today, here's the start of that in that regard. Noah, can you flash through the different indexes one at a time? And
very quickly, one
ahead,
last point to make on stimulus. In the testimony of Treasury Secretary Steven Mnuchin and Federal Reserve Chairman Jay Powell today, they both expressed positive optimism for stimulus and both supported the $908 billion stimulus package as well. I believe it was, I don't know who said it, Powell or Mnuchin, but they said, it sounds like you're hitting a lot of areas that could definitely benefit from help. And so there does look like there is bipartisan, and whether Mnuchin represents the White House right now or not, that there is support from Mnuchin, i.e. the White House right now. There's support from Jay Powell, central bank, and obviously with a slew of Republican and Democratic Congress individuals.
It feels like the pieces are starting to move in the right direction for certain. When that means what we're going to see from that, obviously, I think we're just going to get more headlines and more information about this even in the coming days and weeks. It feels like, this is going to start to become one of those themes like you talked about.
Well, and there was a little bit of a difference in these conversations today and what is happening right now. It feels like they want to get something done. Now, whether or not they get it to the finish line, politically, we know the landmine's there. But it does sound like they want to get something done. I didn't hear a lot of the same type of negative comments from the other side of the aisle like we have in the last 3 months, really since the end of July when the benefits expired the first time. You've just seen the Republicans would come out, Democrats would blast it. Democrats would come out, Republicans would blast it. Right now, we're seeing just the normal political stuff, but we're not seeing just people come out and be like, this is the dumbest idea of all time. We saw that in the last 3 months. We're not seeing that right now.
Gotcha. Noah, can you flash through the different indexes one at a time? Finish on the NASDAQ, because I got a question for both of you guys about, that tech sector and what's happening with the NASDAQ specifically. But give me a quick look at the Russell, the Dow, then the NASDAQ.
All right, Russell. Well, we got the Russell up. It's been leading the market, pulling back to that 9-period moving average with a little sideways chop high base, been grinding higher. And again, pretty good momentum on it overall. If you take a look at the Dow, it's right there poised to poke up above that high. I mean, that 30,000 number is still kind of hard for me to wrap my head around. Just, from here, I think it's going to break that. It's got a nice little high base forming. It looks a lot like the S&P, and there's clean air up above it. So, Yep, it's got a good chance of breaking out there. And then let's see, we got, you want to go with the NASDAQ now?
Mm-hmm.
I think the NASDAQ has a good chance of breaking and running hard. I like the chart setup. I like the new high today. Clearing those old highs is a good sign, and it's been lagging behind the rest of the market. So it'll be interesting to see, but I think it's got a good chance of putting in a good run.
Ever so subtly, ever so, just in its own way, one day at a time, Matt, the NASDAQ's making a nice little comeback and actually starting to push here a little bit. Since last Monday, it's been outperforming the other broad markets. And it's been an area that you've been talking about, that you believe it can play catch up. Obviously, we don't expect energy to run 36% per month every month. So those other sectors aren't going to perform as well. What's your read here, Matt, just across the different areas of the market, specifically tech?
I talked about this area of the market yesterday in the podcast quite extensively, talking about how I do believe that the theme that we've seen adopted in the last 3 weeks post-election is something of a more traditional sector rotation than the swing trading themes we really saw post-pandemic. So my entire analysis on the rotation is a little bit different than what it has been in 2020. I see this a little bit more of a long-term, people positioning instead of just trying to capture short-term price movement. And it doesn't mean the NASDAQ communications, fell in that regard. And I do feel like a lot of that theme, surge in the last 3-4 weeks in energy, finance, and those industrials. I do think that's going to continue, just not at the same degree of, velocity. Obviously, I mean, nobody can reasonably expect to have the energy sector do what it did in the last month and the next month. That would just be absolutely insane and something we've never seen literally in human history. So that cannot be a reasonable expectation. And then when you're looking at them technically here, you especially on, say, communications, discretionary, those two areas of the market, you got very clean triggers for price appreciation there. NASDAQ, is one of those things that can absolutely run. It's starting to pick up a lot of steam in the last few days. It's had relative performance this week. It had relative performance since the breakout last week of that intraday. And then it's just trying to navigate some of those old resistance levels. The difference, though, is even though you're seeing some relative strength here, the key difference is where you call in this is confirmation. Because in a short-term pattern, you could have called 4 days ago confirmation, but you still had chop to the left of the chart. You still had to navigate some of that. I think ultimately you got to respect this area of the market right now. You got to be looking at this area of the market. Ultimately, I do think you call confirmation above 12,500 in terms of really getting those timelines aligned is what I'm talking about.
Well, go to the weekly.
Yeah, and that's what I'm
now.
talking about. Yep. Getting that weekly chart aligned with that daily chart. Obviously, all the traders simultaneously looking at the same type of bullish activity. I think that 12,500 is legit. I do take into account the wicks there at 12,500. If we break out of that, I expect legs up here. But then again, guys, I expect legs up in the entire market. Yeah, so it's just a matter of which one outperforms right now. In the short term, I liked communications. In the short term, take a look at the big areas of the market, the Apples of the world. I like the breakout of 120 and a half, 121 on Apple. When you're looking at Google here, Google, I like the breakout of 1800 on Google here. And so you're seeing strength in this area of the market. You're seeing some strength in tech. You're seeing communications come back a little bit. You're seeing strength in discretionary in the short term. And I do think these areas of the market are going to catch up a little bit to the price performance of energy, industrials, basic materials, and finance over the last 3-4 weeks.
It's been an incredible year for all of the market. Tech specifically was leading the way for a long time. Matt got stuck in the mud for honestly, a couple months.
Talk me out of it. Google at 2,000 in 2 weeks.
No, not going to talk you out of it. Apple, broke that 122 mark. It's looking like it wants to push higher. Google's looking good.
And again, I like the Apple, and I really like the Apple breakout on the weekly chart too. But I mean, Google, there's nothing above 18. I mean, there's nothing there. You do have chop above on Apple. You have chop above on Amazon. So, but on Google specifically, you got nothing. Microsoft, you got chop. Like I said, on Amazon, you got chop left of the chart. And so you got a lot of chop on some of these charts. And know if you can kind of go through as we're talking here, But on Google and Apple, I think those are the two stocks of the big five that you kind of like right now.
Well, yeah, I mean, you got a
Apple,
little bit of chop there.
Apple
Yeah,
was
but
my
I
first draft
think
pick.
I think you have to call a close above 1800 confirmation.
Oh yeah,
I
you definitely
don't
want
think
to.
that's
You want to see
debatable.
a close there, and I think you
Yeah.
really want to see it get up above today's high to really give you, a true breakout. So I think one more green candle up and a close, and you're off to the races. And from there, I think 1900 is the next stop. And what did you call 2000? Like you can totally see it. Yeah.
Yeah, it's just one of those whole numbers, right? But
Yep.
I mean, you wait one day on, and this is the conversation you have to have as a trader, right? Do you want to be aggressive on trigger, or do you want to be conservative on trigger? If your philosophy is the market wants to run, I think you want to be a little bit more aggressive on trigger, because like guys, you could wake up at Google tomorrow being at 1875 and have to trigger there.
Well, give me the intraday. Because even this morning, Matt, I was looking at it, was at 1785 this morning. It's been running a lot here intraday, so it's like you got to have plans ready for these trades, how you're going to play them. And that question of whether or not you're going to conservative or aggressive trigger, Matt, that should probably be made in advance. I mean, you don't need to make that on the fly in the middle of a trading day. You could plan that out the night before, right?
You should have known this trade on Google for the last week, what you were going to do. But again, the mindset of the market does play a role there, right? If the market's a little skittish, you typically want to be a little bit more conservative on your triggers. The market right now is literally talking stimulus, stimulus, stimulus. The market is celebrating Janet Yellen's Treasury announcement, obviously. The market is celebrating economy reopening up. The market is celebrating vaccine news. And when I mean celebrate, I'm talking about getting into that bullish mentality, right? Opening up those risk graphs a little bit. And if you feel like the market wants to run, I do feel like you can be a little bit more aggressive there, just because the market mentality is getting into that buy mode. And especially when you're talking about Google and you have multiple, like two and a half weeks of consolidation with a pretty clean trigger above 1800. I kind of feel like right now you call this confirmation, a trigger above whatever intraday high you're looking at. Whether that's the all-time high of 1821.72, or you find a different level on intraday you're willing to go above. But I think you got to be, if you're looking at communications technology, if you're looking at this area of the market, you got to start looking at Google, and you got to look at Apple too.
By the way, Google was on our weekend option report this past weekend. Coach Tyler, one of our picks up for the week. It was a great little setup developing here today, looking pretty strong. There's a bunch of those I'm going to go through with you at the end of the show, Noah, to have you give us a chart read. But for right now, actually, what I want is a chart read on the commodities and currencies as we're just kind of working through the market one step at a time. Crude oil next here, Noah, a little flag developing here. What's your read on this technically, Noah?
Well, I mean, I like the pullback into the rising 9, but I don't have an overly bullish posture. I'd like to see a little bit of a retest where you got the 9 and the old resistance are both coinciding in the same neighborhood. So there's a potential here for a rally, and I think it's relatively uncontested up to 50. So there's not a lot of technical noise in between the current price zone. If it can clear this high at 46. And a $50 target. I mean, it can do that. It just ran from 40 up to 46. So, I mean, it can run 5-6 points. That's not the question. I don't know if there's much of a bullish theme for energy, though. So the chart looks okay. The pullback looks decent. You probably will see a little confirmation up. Are we going to see, increase in consumption? Normally this time of year, we do see an increase in consumption, but we're talking lockdowns again. So, big question is there something to help push it higher? Technically, it looks good, but I don't have a lot of confidence in the underlying narrative.
When you're talking about the demand side of it, on the supply side of it, I know OPEC did just meet over the last 2 days. They didn't come up with any official policy that they're going to do in the first quarter of next year. They're talking about keeping the restricted output for the first 3 months, where they were going to originally lift that in January. It looks like they're going to be extending that. But that's that supply side of it as well. But the reality is, Matt, all of those theoretical arguments about supply, demand, the economics behind it, the chart is looking constructive for the first time. And I think anybody has to at least admit that. Again, I'm not going to trade this one personally. I think there are better ways to play. Even if you believe in the crude play, there's energy stocks, there's different setups, there's all kinds of different stuff for me personally. But Matt, that chart is developing a little bit more constructive, isn't it?
Yeah, I mean, you got it as a bull flag or a high base type scenario right now, which means if you got it as a flag, you're looking at the momentum trigger above the 30-minute intraday resistance chart. And if you're looking at it as a high base, you're looking at the breakout with the potential target of 50. So at this point with crude, I've read the Saudi Arabia and United Arab Emirates news today with Russia backing, and I was like, I really don't care about that at all. Like, I don't care that UAE wants to increase output by 500,000 and Russia wants that and Saudi Arabia is fighting it. I don't care.
Yeah,
I'm
getting
looking
pulled
at
into the
the,
drama.
I could care less about Saudi Arabia, and I think everybody should have that same feeling. But in looking at this, the crude chart is getting constructive. It really is. It's getting consistent. It's getting constructive. It's treating the 9 like an indicator again. And so yeah, I do think short-term traders are looking at this. Long-term, I have no interest in this area of the market.
Mm-hmm.
Short-term, any trader is going to try to take advantage of something short-term.
Yeah, absolutely. Absolutely. Gold next, if we can, let's move into a longer term product. And Noah, I had Matt do a thorough breakdown of this on the podcast and on the show yesterday. Just give me a quick technical update or read that you're seeing here. I loved Coach Frank's little tip in the podcast, by the way, about guys, if you're trying to figure out when support's going to hold, I mean, you might want to have some kind of technical rule in place. Wait for it to get above some of your moving averages or something like that to give you confirmation. I thought it was a good little tip from a technician. Noah, what are you reading here from a chart?
I really like this chart from the weekly perspective because it is a deeper pullback. It violated a lot of what I would look for on the bullish side up here. And on the weekly chart, you had it pull down to the 50-week moving average in this old support resistance zone Matt was talking about, that 1770, 1780 ballpark, which is that's a significant price level for it. So between the weekly moving average and the support resistance zone, you've got a good technical catalyst. Now, no guarantee it's going to run. When you back it back out to the daily chart, if you're looking for that Frank style confirmation, it's got to get up above the 9. But then I always look at the difference, or when it's trading between the 9 and the 20 on a downward drop, I call that the bear area. And on the bullish side, it's, when you get a pullback between the 9 and the 20, I call that the bull area. So I want to see it not only, get up there above the 9, I'd like to see it break above the 20 myself to give me more confidence from the bull side. Again, I don't mind the price of gold dropping. I mean, it gives you an opportunity to buy more. And this, I think today's pop is one part technical, but I think it also comes in from a little bit of the talk of stimulus and the Powell testimony saying they're going to keep doing what it takes. Dollar, I see lots of chatter about, dollar going to zero type thing over the next however long. That's all hyperbole, but the idea is still there. They're stimulating, they're printing. And so gold is always that people always look to it. And this, from a technical perspective, has got some potential here for a buy zone, but you might want to see that confirmation like Frank was talking about.
Mm-hmm. Give me silver next if you can. I want to get Matt's read on, little brother here that we talk about, whenever it starts to heat up a little bit, Matt, it's holding support a little bit better. I'm feeling a little bit more constructive from a short-term perspective, a different type of product here. Matt, what's your read on silver?
The double bottom at 22, it never came down to that 200-day moving average, kind of like gold does. So you got to have a little bit of a relative outperformance here. You won't see that in the rankings of tackle trading because we do take into account fundamental analysis in the ranking of specifically gold. But yeah, I like silver here. And as a trade, I think if you're looking at the potential breakout of 26, you can get a little excited with the constructive nature of the bounce off 22. You're in neutrality, which means you're not buying a support bounce in neutrality. You're looking at the support bounce saying, okay, I like the breakout now. And so yeah, if you're looking at silver playing a little catch up and you think the precious metals are gonna run a little bit right now, yeah, I would definitely look at silver. I still like silver above 26 with a target of 30. So I think that's the trade on silver. But when it comes to gold, I talked about the battle, fighting and being played out on gold. And that's what you're seeing in the last few days. You're seeing some increased volatility and that's going to happen a little bit. But I think the one thing to keep in mind for the gold owners, and guys, these things happen, but they always come back to some degree of normalcy. The dollar and gold have been both trading to the downside in recent weeks. And that that never continues. One has to shake out, right? They have to come back to their divergent status. And so when you're looking at the dollar, take a peek look at the dollar chart there, Noah, if you don't mind, and please take it on a weekly chart here. So ever since really early October, you've seen a downward movement in the dollar pressuring that breakdown. Now that breakdown to me on the dollar is significant. Number one, it's a technical breakdown. Number two, it's on the backs of, the Fed, the central bank, the government talking more money, more money, more money, more money, more money. They kind of see it as more problems, more money, right? That's kind of how they see it. And so when you're looking at this breakdown on the dollar, I do think this is significant. And so for the gold owners that have been a little concerned, and for gold owners, you should not be concerned with downward movements in price in gold. Noah has the exact correct approach. You look to dollar cost average down, you look to acquire more on short-term downward movements in price, especially in an environment where the United States is literally trying to become the nation of Japan as quickly as we can economically. And so you want to own gold as a hedge. You want to own gold as an inflationary protection. And you want to own gold as an offset against your purchasing power of the dollar. And so when you're looking at the dollar here and you're seeing the breakdown, you're not just seeing a breakdown of a chart. You're seeing the breakdown of literally your purchasing power in the United States. And so as your currency devalues, and as Jay Powell said today, we see an end in sight. I'm not sure what end he was talking about, the end of the dollar or the end of the pandemic. I don't know what he's talking about. And so when he sees an end in sight, dollar's going down, you got to look at gold and you got to be like, how in the world could you be negative on gold when the dollar's breaking major support? Mm-hmm. So the battle's going to be fierce on gold, no doubt. Gold and the dollar have been running to the downside together over the course of the last couple months, honestly. That's got to shake out. And right now, are we seeing the beginnings of that shakeout with the dollar breaking support and gold, going back up above that 200-day moving average? I think it's early, but I think gold bugs are getting a little excited based on what we're seeing in the dollar. Correlate that with happening on gold chart hitting that 200-day moving average. And I think the gold owners are going to get a little excited here.
Mm-hmm. And traditionally, that inverse relationship, Matt, is important. It's not the only thing that goes into the analysis, obviously, around the gold and the dollar, but those still have correlation, inverse correlation. Yeah, for certain. Bitcoin, last one here, Noah, and then we're going to get into stocks. Noah, just give me your chart read on Bitcoin if you can.
It's going up. It's been a pretty interesting ride. I was quite surprised, like a lot of people were, with that sell-off last week. And then the instant recovery was impressive. And then today you're seeing it kind of slow down again, a little selling pressure out top. 20,000 is a big number. And I would personally be much happier, considering this on a dip, a correction back down towards that 20, maybe even deeper. But once you back it out to a weekly chart, 20,000 is a big threshold. And it certainly can break above that and run. I don't know if I agree with some of the out of this world projections, like Bitcoin at
$375,000.
Sure, why not? But I can see Bitcoin at $30,000.
$1 million. Let's do it.
And who knows? But I would much rather trade a breakout off of a pullback. Like if you could see this on a weekly time frame, turning into like a big macro cup and handle after a pullback. That means you get a deeper correction down in here, maybe to the 1860, probably 1600 zone, where it could build back up. And I think, there's just lots of new money pumping in. And my question is the old money at some point in time, people have owned it looking to sell?
Get into the hourly chart for 1 second.
The only reason Wall Street does those projections, guys, is because they get clicks.
Well, clearly, if you want to sell it at a higher price, you have to convince somebody to continue to buy, right?
It's absolutely, it's insanity is what it is. It's pure insanity. But
don't you think they also got to start one up? They all got to start one up in each other as well.
Obviously. That does happen with the one up, but I do believe listen, we know this. Consumers aren't clicking on a Bitcoin headline that says my target's at $22,000. Mm-hmm. They click on something with Bitcoin 185,000.
Yeah.
Consumers deserve this to a certain extent, honestly.
Yeah. And the reason I bring up the hourly or the 30-minute chart that you have up here, any kind of intraday time frame, is just from last Wednesday till now, the price is the same as where it was when we had our show last week, heading into the holiday. But the volatility over the course of that 7-day period, guys, is just a reminder to
nasty.
anybody new to crypto. It's nasty, Matt.
The only body that actually enjoys that is the holders the last week. It's been a nasty few days trading
it's been something volatile, no question about it. All right, guys, let's talk individual.
Like literally, bulls got stopped out, bears got stopped out. No trader's actually happy. The only happy Bitcoin person is the holder over the last week. Personally, I think that trade is done. I think you got to wait for consolidation and then the breakout of 20,000.
Yeah, and here as a holder, investor in Bitcoin, I'm just like, volatility's whatever. I don't get too worked up about it myself.
You got to recognize when a trade's done, though.
Yeah,
traders have to recognize that. They have to recognize when the last remaining part of analysis is just, I hope it goes up. That's when you need to go out. You were past at 20,000. You were past your average time. You were past your average price. The trade was over last like Tuesday, Wednesday. The trade was over. Now it's wait for the next trade. You got to recognize when a trade is over.
By the way, we're going to have Jake Larmore joining us.
And by the way, whenever I say there's a battle happening, that trade's over. Traders don't join the battle. We join the winning team.
Right. The battle creates new opportunity for that next transaction.
So you just called all traders bandwagoners, pretty much. Like
we're the biggest flip floppers in the history of the world.
Yeah, good traders. Yeah, are. You don't want to get stuck on an opinion for too long.
I always root for the winning team. How about you guys?
always. Who won the game? Hey, wait, who won the game last night?
The winning team.
I'm a Seattle fan now. As a trader, that's how it would go.
Oh my, I've got a running bet with my friend from Seattle, one of our students, Ken Lawrence, about the Seattle Seahawks and the Bears, who wins the most games.
That's not a bet, bro.
It's a bad bet. It's a really bad homer bet.
That's over, bro.
Yeah, my team is not doing great.
Well, it's very simple. Seattle's got a legit football team. Chicago doesn't. It's a very simple analysis.
You should have stop lost out of that bet a long time ago.
You got to recognize when a trade is done, bro.
You got to recognize when it's done, bro.
This one was done in 2018. I didn't recognize it then.
I think it was done in 2008, but yeah.
Well, we won the division in 2018. We're not talking Bears today. We're done with that. Moving on to stocks here, guys. Let's talk some individual companies. We've got to start with Zoom earnings if we can. And as we're transitioning into this part of our show, when we start talking individual companies, a couple of things I want to remind everybody of. Number one, welcome. Appreciate you guys. If you're brand new at our channel, smash that subscribe button. Come back and join us on a daily basis. If you're out there watching our show right now and you're Team Tackle, I do this about once a week. Why don't you just type in where you're at in this world? Are you in California? Are you in Kuala Lumpur? Are you in Mexico City? Are you in New York City? Let us know. Just type that in the chat. I love seeing where all of our communities is out there watching the show from. Let's start with Zoom here, Matt, and earnings on maybe the most popular name in stock market for this year. That could be a debate, obviously, but it has been in the consciousness, caught the consciousness not only of the public, but investors alike. It's been a huge.
That's a great question, Tim. What stock represents 2020 more than Zoom? And I'm not just talking about the stock market. I'm talking about our world.
Yep.
It's Zoom and then it's everybody else, right? And Zoom's had some struggles recently. Obviously, it's got over elevated in the short term, historically over elevated in the short term. It's a company all of us really, really like. We like their product, right? Obviously, when you've risen this much in a short time period, you have a different expectation on earnings numbers. You got to prove it. You got to show it. You got to show you deserve to be up there in the clouds with the big boys, right? And Zoom had an amazing earnings report. They truly did. But was it enough to offset that, and I want to say unreasonable expectation on Zoom? I'm not sure Zoom could have achieved anything to date, quite frankly. They came in at 366% increase in revenue year over year. That wasn't good enough. Guys, that number is a ridiculously powerful number. Any company in the history of the world that had that type of growth year over year would celebrate. But again, your expectations coming into something like this have to be elevated to a level that is unprecedented. And you just can't expect them to constantly achieve that. It's just not going to happen. So I do think there's a little bit of just a Zoom, just unreasonable expectations here, right? Because the numbers were really, really fantastic. And when you compare last year to this year, now when you compare the ESP numbers versus the expectation, this is where it gets a little bit of an understanding of why we're seeing, Zoom down 15% so far today. They came in at 99 cents a share versus the expectation of 75 cents. So a nice little, 25, 26% beat on EPS numbers, which is pretty decent. They came in at 772 million versus the 694 million. Once again, really good number, pretty decent number, good beat on revenue. But again, what was the expectation? The expectation was close to 700 million. They came in at 772. That isn't good enough to justify what has happened this year with this specific company in Zoom. So, I think this is a company that's here to stay. I don't think this is a, till rate hits 300 and back down to $7 scenario.
Mm-hmm.
I think Zoom is a company we're going to be talking about for years and years and years, to be quite frank with you. But I think it's tough sledding looking at Zoom right now and saying, okay, I want to buy Zoom in my portfolio and hold it for the next 5 years at these elevated prices. I think you got to wait for some type of consolidation, downward movement in price, give it a little bit more earnings from a fundamental perspective. Trading, you can trade Zoom. I'm talking more long-term fundamentals here. Trading, you got to wait for the patterns to shake out here. But I got Zoom's earnings reports as a pretty decent earnings report. The 366% increase in revenue is astonishingly good, but they just didn't come good enough on revenue and EPS numbers.
Mm-hmm. And from a trading perspective, those patterns do need to shake out, just like you just said. It's going to take some time.
It's going to take time.
It's going to take some time here on Zoom. In fact, Noah, I even see kind of a little bit of a reversal pattern developing, obviously. There's
also a reason we haven't talked about Zoom in the halftime report for literally the last couple months.
Yeah, chart's not been constructive.
Yeah, has been constructive.
Yeah. No, what are you seeing in the chart? Just give me.
Well, that lower high in the gap down right here on earnings. I mean, you had little gap down pre-earnings. And I think what was that? That was that same Pfizer Monday or whatever that was. Mm-hmm. You saw a gap down and it came back up and filled that gap. And gaps can act as support and resistance zones. So, here's an example back here where it had a gap up and it came back down and fills the gap and it can act as a support resistance zone. You got that same thing, hangman candle right before earnings. And then the gap down both on, above average volume. And it's currently selling off down towards 400. Now there's plenty of support down here, 400 to 75, 375 zone. But in the meantime, that lower high, you got one lower high, two lower highs, three lower highs. You're back down below, 3 of your moving averages, and you're still, above your 200. I wouldn't be surprised to see those two catch up at some point in time, because the investors will, they're more interested in buying down around that baseline. And, it's a pretty impressive report, but at the same point in time, they missed some of those numbers and boom, I think that lower high is, what's the word you're using? Constructive. It's not constructive. It's deconstructive for sure.
Mm-hmm. There's a couple of thoughts I have as you guys were both talking about it. Matt, you made a statement. I believe Zoom's going to be here for years to come. We're going to be analyzing it. I would believe that as well. I mean, here's the thing. It was up 500% year to date coming into the report. They had to absolutely crush it. They did a great job. The numbers were really good, but the market is selling on it. And it's within, the volatility of Zoom, quite frankly. You've got support and resistance, support below, resistance above, and a pattern that's not developed yet. So patience, I think, on this one. Obviously, a great year for Zoom. And, I was thinking about that as well, Matt. What company has caught the consciousness of the market more than Zoom in 2020? Maybe Tesla. I don't think so, though. I don't know. It's good conversation. Moderna with the vaccine news all the time.
Yeah, I think there's candidates, right? I don't think it's Zoom and then nobody, but
yeah.
I personally would say Zoom is one of those companies that does represent kind of the 2020 year more than others.
I agree. All right, let's move on. Let's why don't we talk Exxon Mobil next? We're going to get into some Dow drafting that we did on the podcast today here in a few minutes. Exxon was not a candidate to be drafted on the Dow because they got dropped off from it this year, but they're trying to correct some of the issues they've been dealing with here, Matt. In fact, what do businesses do when they go through problems? They cut costs, right? They cut costs. That's what they're going to do. And they expect to cut 15% of their global workforce by the end of 2021. Capital spending next year around the 16 billion to 19 billion mark. They want to bring those numbers down over time.
Also taking a $20 billion charge as well.
Yeah, they're going to dump some assets in like the Appalachian Mountains, Rocky Mountains, Oklahoma.
Anything instead of cutting the dividend.
Well, and here was the quote from the CEO. I love this.
We're gonna cut all the workers.
Mm-hmm.
We're not gonna produce we're not gonna produce a product. We're cutting everybody.
You tell me if this isn't
where we're not cutting the dividend.
Matt, it's not about people, it's about the bottom line.
Yeah. Once people understand that's how corporations approach them, the world will be a better place.
It will change the way they deal with labor disputes for
Yes.
sure. Quote from CEO Darren Woods, and Marky, welcome, by the way. See you popping in here. We're talking Exxon Mobil. Continued emphasis on high grading the asset base through exploration, divestment, prioritization of advantage development opportunities will improve earnings power and cash generation and rebuild balance sheet capacity to manage future commodity price cycles while working to maintain a reliable dividend. The most important word of the whole thing was dividend. That's what investors who are trying to read the tea leaves there behind the CEO are going to hear from Exxon Mobil. Cutting costs to try to keep the dividend in place. Matt, what's your read on Exxon here?
From a technical perspective or a fundamental perspective?
Yeah, both, I guess. I mean, this is one of those stocks.
Let me be clear again, fundamentally on this area of the market. This is not an area of the market I believe in long term. I do not believe in the bullish theses on oil production, demand, consumption that OPEC puts out there. I think we're going to see contraction this decade. I think we'll see contraction next decade. And I think we'll see contraction the decade after that. I believe in the ESG movement. I felt Larry Fink said it the best this January when he basically said, we're going to eliminate our fossil fuel investments and we're going to be looking at, ESG at the ESG movement. And so this is an area of the market I do not believe in long term. Short term, you're going to have pockets of really good price appreciation, and you're going to have pockets of price depreciation here. Technically, I'm looking at this as a short-term bullish uptrend with a bullish retracement catching on the 9, kissing off resistance on the overhead at the 200-day moving average. And I do believe if it breaks out the 200-day moving average with that pivot point on Exxon Mobil, that could be actionable. Mm-hmm. Long term, I do not believe in it. Short term, I do think you could aggressively trigger above $40 here, underneath the 200-day moving average with confirmation. More conservative, you wait for the reclaiming of that 200-day moving average. But I long term don't believe. Short term, I like the constructive nature of this pullback.
Mm-hmm, mm-hmm. Mark, more important than any Exxon analysis here. Welcome to our show. How you doing today, sir?
I'm doing good. Are you kidding? Everything's going up. Like life's good, right? So as long as this party is lasting, it's a good day.
Oh, hey, Mark, just so you know, last night during the webinar, I suggested people might email you, team at Tackle Trading, and look to see if you're in a good mood about some holiday offers on our other products.
Listen, I have been selling products at discounted rates all morning long. So some people definitely took advantage of that.
So you do know that already. Okay, good.
Yes.
No, you don't say the quiet part out loud.
All right.
Listen, I'm not a micromanager. I've told Mark take care of our students. I won't question it. You take care of our students. And as long as Mark takes care of our students in our community, I am perfectly happy.
Yep, absolutely. A couple more companies I want to get into. And now that Mark's here, actually, I do want to talk about that Dow draft we had a little bit. A couple of quick news items. I don't know if there's a lot of in-depth analysis needed here. If you guys got anything, more than welcome to pop it in here. But Tesla, real quick. We all know they're getting included into the S&P 500, Matt.
I know, but this is just, I'm going to watch my language a little bit. Tesla up 5% today after going from 450 to 600 in a blink of the eye, on news that they're going to be injected into the S&P in one go round and not two, sends the stock up 5%. That honestly, it's the dumbest reason Tesla's ever been up 5%.
Oh, that's
and Tesla's had some real dumb reasons why it's up 5%.
That's a bold statement. Let me think about
honestly, Tesla might be number one of the dumb reasons why Tesla goes up 5%. Tesla goes up 5% when they do a stock sell. Yeah. And I still think this is in the running of the dumb reasons why Tesla's up.
Yeah. Yeah.
They're being included in one go round. That's the news.
Yeah. Instead of two.
So instead of us buying shares over a 2-week time period, we're just going to buy the shares, and that's up 5%. Come on. This market is fundamentally just disconnected from any semblance of any economic reality.
It's wacky. By the way, they haven't announced which company that will be replaced. That will become. They'll give us that announcement here.
It doesn't matter. Just make the S&P Tesla.
Just Tesla.
Kick them all out. Just make them Tesla.
Tesla.
We'll all get rich and we'll offset inflation.
Mark, what stock do you think has captured the essence of 2020 the most? We were having this discussion before you got on here. Like we were talking Zoom earnings, Tesla here. We're talking a couple of big major names, Moderna with vaccine news. What
I might
about that if you want.
If I only get one answer.
Yeah. Think about it. Think about it. At the end of the show, if you got an answer. Yeah, think about it. Tell me what, because put some thought into it. I think Zoom is a great answer to that, but there could be a few candidates in here. Let's talk
for the general public. I would say Zoom.
Mm-hmm.
For our human condition, what all the changes we've seen from a business perspective, from a consumer driving online more than traditional retail, from our kids. Right, all of our kids at school right now. What are they doing? They're on Zoom right now, right? So I just think for the human condition, I would say Zoom, but I think there's other stocks in the running from a stock perspective.
Mm-hmm. Mm-hmm. All right, let's talk. Last one, actually. I'm not too interested in the Pfizer BioNTech news. It's just an update from before. Kohl's, though. Yeah. Give me Kohl's if you can. I think this trend is going to continue across companies like Target and Kohl's and Walmart and whatnot. We've already seen these little micro stores within the store. They did announce that they're going into a partnership with Sephora, which is a lot of times in malls. Mall traffic obviously is going to be down. We're transitioning the way people buy stuff. They're going to be putting these Sephora stores in 800 Kohl's locations. The market does like it. It's a pretty popular product. They want to get those 800 stores by 2023. Mark, any interest in Kohl's here or in just that trend in general?
No.
So
listen, there's lots of ways.
Yeah.
There's lots of ways to play this rotation. Retail and oil are not the places I'm looking at.
It's not your preference. Noah, go ahead.
Oh, I was just going to say, it seems to me that, these stores like Kohl's and Target, Target with Ulta and Kohl's with now Sephora are becoming, what do we call it, micro-dosing department stores. Like they're going after
they're all going
and
they're all
Macy's
going
model.
at Macy's. They're all going Macy's model. I mean, and they're all trying to do the cosmetic as a way to get people in the door.
Yeah,
I get it. They're all doing.
But does that also gut those companies, retail presence elsewhere? I mean, they just.
I think it does. I think in the short term, people are. It's not. I agree with Mark. I agree with what you're saying. No, I don't have a lot of interest in Kohl's short term or long term.
Well, it just seems like the resurgence of the department store without elevators. I mean, it's kind of what you got.
Yep.
Mm-hmm. Boys, yesterday we had a podcast. Noah, if you can bring up the Trading Justice website, I did want to chat with you guys. And Matt, we had some fun actually doing a draft. And who doesn't love a draft to begin with?
Oh, we love drafting.
I love it. I could literally draft something like every week.
Literally.
Let's draft
whatever.
Best cheeseburgers. Yeah.
Oh my goodness. First round. That would be a debate even far more than what the debate we had yesterday on first round stock picks. First round stock picks were pretty chalk. I would say, but best cheeseburger 3-round draft. Oh wow!
I already have my first round pick.
Who's your first round pick on the cheeseburger?
It's got to be a national chain,
and it's called the Cheeseburger Eddie Draft.
Yeah, it can't be your local pub that you just love that nobody else knows what it is. It has to be a chain brand. I would pick In-N-Out Burger with my 1A. That's where I would go. Yeah.
Dude, the McRib's coming out this week.
God.
We're talking cheeseburgers, bro.
We're talking cheeseburgers, bro.
I'm sorry.
You can add cheese to your McRib, can't you?
Dude,
no, that sounds
like a good idea.
That sounds awful. Even Mark is like, no.
No.
Anyway, Matt, talk about the podcast a little bit. And then when we go back to the charts, I want to flash through kind of some of the draft results and see if you guys still like your team. But Matt, talk a little bit about what we did.
Yesterday we did for the feature. Obviously, we did our Skyline where we break down all the news, then the market activity that week, and really enjoyed the conversation on the Skyline. Hopefully, you guys get some value out of it. But the primary purpose of the podcast yesterday was literally going through the Dow 30. And there were 5 coaches: Tim, Noah, Mark, myself, and Coach Frank. And we just did a random draft stimulation where basically I believe I picked first, Tim, you were second, Mark was third, Noah was fourth, and Frank had the wraparound draft pick there. And we just went through and drafted the Dow 30, and talked about the stocks and talked about why we liked those stocks and why that was our pick. And that's kind of where I really enjoyed the analysis, is kind of just talk about why Mark likes this stock or that stock. And my first round draft pick, I was looking at honestly Apple, Microsoft, and Walmart. And I thought Apple and Microsoft would go 1A, 1B, and they did. I liked Microsoft, and I took Microsoft. Tim, you wrapped it with Apple. Mark, you brought in Walmart. Noah, you took first round, a little bit of a shock in the first round, Salesforce. Noah, we liked the Slack acquisition, and then Frank took Visa. It was just, I personally like doing those things, but I like kind of, getting into the mindset of how the coaches were looking at diversification and correlation, and, making sure that they got stocks that fit their portfolio. And I like my draft here, Tim. Out of the Dow 30, I got Microsoft, Caterpillar, nice little industrial play. So I got my foundation with Microsoft, right? That's my foundation with Microsoft. And then I believe in the industrial play, so I wanted to take an industrial play. I had targeted Honeywell coming into the draft. Tim, you snaked that one for me right before that, so I had to go to my secondary pick, which was a close one for me with Caterpillar. So I got my industrial. I believe in the discretionary movement, not specifically coals and whatnot, but I wanted retail. I believe consumers.
No, back on the chart for a second. While Matt goes through these, why don't we flash through them rapid fire style on the charts? So anyway, go ahead, Matt.
Yeah, and I wanted some discretionary. I wanted some power of the consumer is what I called it, right? And we know how powerful the consumer is. Nike has been just a juggernaut. If you'll pull up the Nike chart there, I absolutely love what Nike's been doing. It's a strength in the market. Love the fundamental analysis behind Nike, and I love the potential breakout there. So I got the foundation of Microsoft, got my industrial and Caterpillar, got my discretionary play in Nike. And the financial picks, I had Travelers ranked, TRV there, Noah. I had Travelers ranked there above a lot of the other financial picks. I did want some space in finance, but I was looking at a Goldman there. I was also looking at a Visa. Frank took Visa. American Express was taken in front of me as well. So I was looking at the financial play, and Goldman Sachs had just been taken. So Goldman was gone, Visa was gone, American Express was gone. But I had actually targeted Travelers. I liked the insurance aspect of it in the financial space. And then, with my fifth pick, Tim, I got, we'll call it the dogs of the Dow. Noah loves that thing, but I got the Dow. And there was only one basic material stock in the Dow 30, and that is Dow Chemical. And, obviously everybody knows how much I like gold, and silver and copper. Copper's been really, really good. But when you only have one area of the market in an index, there's only one stock. And I like the material space, and chemicals have been the hottest spot in the chemicals, in the basic material space. So I got the Dow, and then I was donated IBM at the very end.
Well, it was the last pick in the draft.
I got Big Blue.
We got to talk about the first pick of the draft, though. I got to tell you, I don't think we can move past this. Cody brings up a very important point. Cody, I forgot about this. So please clarify for me, because I find this very interesting.
So I mean, Matt, I'm normally with Matt on this one, but yesterday during the show when we were talking about what the draft was, Tim literally made the point of, Apple may not need to be the first draft pick because there are other companies like Microsoft. And Matt, you railed on Tim saying, no, Apple needs to be hands down the number one pick. You hit him hard.
Cody,
and then you pick up Microsoft.
Have you never drafted a fantasy draft with me, Mark, and Tim before? You do not listen to anything Mark or myself says when it comes to drafting.
Oh, you
it's a total dog.
No, listen, I go back and forth all the time on Apple and Microsoft. Like they're 1A, 1B for me. Sometimes I like Apple more, sometimes I like Microsoft more. But I thought about it, how I want to design it. I felt I could get something like a Nike later on in the draft where I could get a little bit of that same Apple love. I didn't feel I could get that with Microsoft later in the draft. So it was just draft strategy, bro.
Maybe it was, but yeah, you were like Tim. There's no argument here. There's no argument. Whoever gets the first draft pick better take Apple, or you're an idiot.
Yeah.
A little gamesmanship there. It sounds like, Cody.
Little gamesmanship there. No, I mean everybody. I believe.
I think he's backward. I think he's backward filling his excuse as to why he took Microsoft.
Cody, I hope you think that, because I do look forward to drafting with you and taking advantage of you many times in the future.
Noah's picks, by the way, CRM was your first pick. Noah made a little bit of a splash there. Obviously, go and listen to all of the podcasts. Noah, you also had McDonald's and Disney. Noah, how'd you feel about your draft? Johnson & Johnson, Amgen. I'm missing one. Procter &
Well, I felt like I was just taking picks that would like steal from the other guy. Like, taking CRM was kind of my only, go-to, just because I thought it had the legs to get up and go and perform. May not. It might be a dog. But I just took McDonald's because Mark wanted it. And then I took Johnson & Johnson. So that Frank
Noah played the role of hater.
Yeah, basically it's all I did.
He just blocked people's picks. And Marky, I thought you had a great draft, a very interesting little lineup for you here.
Okay, I'm going to read the lineup.
Yep.
And you tell me if there's any portfolio ever designed that fits Mark.
Okay. I already know my answer.
Walmart, American Express, Coca-Cola, Intel, JP Morgan, and Walgreens.
Maybe not the JP Morgan pick.
Well, he took that, so I couldn't have it, basically.
Yeah.
Yeah.
He wanted finance, and that was towards the end of the draft when you're looking at, all right, do I take JP Morgan, Dow, IBM? I mean, you're not competing JP Morgan against Microsoft at that point.
Mark, you feel
all
good
I know is if value outperforms tech, I'm in a good shape to win this. And if it doesn't, well, then we're never going to bring it up again.
I'm willing to bet we never bring it up again.
I got a calendar reminder. I'm not joking. I will remember this one. But you guys all hate my draft. I don't know why. I like it.
Tim, we always hate your draft.
Apple.
We hate your fantasy draft in football.
Honeywell, Home Depot, Boeing.
Dude, I thought you reached for Home Depot, and you're acting like Boeing's an actual pick here. So yeah, you threw out Boeing like it was and Verizon. I got a first round draft pick. I got Boeing in the fourth. Come on, get out of here.
It was fun though. All the way around, very enjoyable. The actual contest is from that moment forward. So starting today here, Mark, all the way through 2021 to see what the performance is. Made our draft picks going to be an interesting one to kind of review. Go listen to the podcast, have some fun with it. I really enjoyed it. Last here, guys, I got a couple of charts I want Noah to read for me, if you can. Noah, I went through the weekend reports and I found a couple I just want some updated reads on, if you will. And by the way, stock report, option report, we do these each and every weekend. It's a part of our pro membership. A lot of you guys out there that are pros, I know this is something you use regularly. Very popular product. Take a look at Honeywell, if you can, Noah. HON. So a couple of candles kind of back and forth through the week. It looks like the triggers are about the same place. No, I still very much am anticipating this breakout at 210. What are you reading here?
Well, that there, Tim, is a pretty darn good looking ascending triangle. I had an involuntary Pavlovian response just a moment ago where that 210 trigger looks super clean. And the series of higher lows leading up to it, that's pretty. Guaranteed, not a guarantee, void where prohibited, not valid in all states. But that is a textbook breakout looking setup. Whether or not it follows through, we have obviously need that confirmation. But that's a good looking ascending triangle for the chart pattern readers out there.
So from one down pick to another, look at American Express. This one's on Mark's team for 2021, AXP. And kind of testing a little bit up here, obviously with the intraday. Noah, I mean, where is the breakout here for you if you're reading this right
I think
now?
it's broken. I think it's poked up above 120 and it's retesting at this point in time. So if you were to take that down at like the intraday time frame, maybe back that out to where you're seeing 20 days, 1 hour, you can see where it's poked its head up and it's in a retest. So I think that you already have a breakout. You could trigger above today's high with no problem.
That's kind of what I'm looking at as well. Take a look at Crocs. One more bull and one more bear.
So this is one we featured last night in
that.
our little webinar. And what's the word I'm looking for? Nailed it. Nice little move. Got a little trail stop on it already, but nice looking pullback into the little bull area between the 9 and the 20. Support resistance zone, small candles. Got that upward confirmation today. So I think upside targets on this are probably in the 66 zone, 67 neighborhood before it grinds its way up. It's who would have thunk Croc? I mean, maybe Frank. Frank obviously, loves the Crocs, but they're moving.
Good looking retracement. You got confirmation here. Obviously, you need to map out reward to risk and all that stuff, but you did nail this one yesterday, talking about that one in detail. I saw in the webinar. Then last one, a bear here, Noah. Beyond Meat was on our options report. Is this still, waiting on confirmation as we're kind of stuck here? It's attempting, got a couple little red candles here, but no substantial moves yet. How would you read this one?
Well, I think that the bearish setup in general is pretty good, and it, probably triggered for some. Obviously, you can see that here, but downside to that 200 period moving average is I think still quite realistic. With these long lower shadows in here, let me kind of zoom in on those so you can really see that. These long lower shadows that can kind of set you up for a reversal back up. So you kind of keep an eye on that. Kind of depends on where it closes today, but it did kind of break back down below those moving averages. And after putting in a little bit of an intraday double top right there, it did poke down below the first support zone that I would trigger underneath.
And one coming from the chat here. Let's take a look at DKNG. Got a question and a conversation developing here on DKNG. Swin says, I think Donkey Kong will continue climbing and set a new high if it can break that 55 resistance. No, give me a chart read on DraftKings here.
Well, nice pop up. You got two inside consolidate, kind of an inside consolidation candle after you got the hangman, and you got those same long lower shadows on that rising 9. This type of inside consolidation and general setup, I think it can continue to run. If you're looking for a place to trigger, you might not, you could trigger above today's candle or wait for it to take out the high. But I think that concept right there, just when you break it down intraday, is going to be inside consolidation. You can see the symmetrical triangle there on the hourly chart. Like you can see that kind of inside pinch. And I think that's got a good chance of continuing higher.
Appreciate the technical breakdown as always, Noah. Just some that grabbed my attention. I knew you were going to be here. Want to talk a little bit of those charts with you, so I appreciate that. Guys, let's start moving into final thoughts here. Been a fun, energetic show. I've enjoyed the conversation quite a bit. Back on the market here. PayPal looking like it's breaking out.
I just had to check it.
You had to look at it.
I got you. We talked about it last night, and it was one of our candidates, and we built a little bull call debit spread on it. So
it's looking good.
Good.
Yeah, looking like a nice little breakout. Back on ES here as we get final thoughts. And Marky, let's start with you, sir. Anything for our audience out there, anything on your mind particularly, and events that we're having at Tackle Trading, if you can do all those things.
Well, just let me start off with I've had a couple students talk to me over the last 24 hours and they have concrete, reasonable trading plans. And they're like, well, this is when I normally exit. This is when I take profit, but I think I'm leaving money on the table. Listen, I understand in FOMO driven, euphoric, ultra greed environments. I mean, it is so easy to want to stretch your leverage and do some things that probably are irresponsible. Stick to your trading plan. Be happy making money. This has been a great environment. It has been a great environment. Just don't put yourself in a position that if for whatever reason it turned around, you had violated a bunch of rules and are a little bit panicking. Be happy making money. Don't stretch it too much.
Very good. Good, wise words of advice there. Noah, final thoughts from you, sir.
Be careful out there. I mean, it's obviously leaning toward the bulls, and I think that it's pretty safe to say it's bullish sentiment for now. But trade smart. Always keep those position sizes and stop losses and defense mechanisms in place. Build your portfolios wisely.
Mm-hmm. Mark, who's on the coaches show tonight?
We have Tyler Craig and Noah Davidson on the coaches show tonight.
Tyler and Noah breaking down charts again. Always two great educators. I think you guys work really, really well together as well. So looking forward to that. That's 8:30 p.m. Eastern Standard Time. If you're a pro member, come and join us. If you're not yet a pro member, there's a 15-day trial link in every one of our videos below. Come and join us, see what we're doing on the back end here with all these reports and these shows and these classes. Matt, let's get your final thoughts here, sir.
A couple things. Number one, if you go back to the chart very quickly, S&P is breaking out, and you definitely got to, consider that the chart of the day. The Dow Jones just hovering right underneath that $30,000 breakout. But one thing to keep in mind, and we didn't talk about it tremendously today, but we'll talk about it more this week. The breakdown on the dollar, I think, is the chart of the day, to be quite honest with you. That to me is a very significant tell for so much in the market, both for price appreciation in the actual stock market, gold analysis, and it goes on and on. When you look at that UUP chart and you see that breakdown, and go to UUP, please. When you see that breakdown on UUP and you're thinking, oh yes, okay, that's positive for gold, no doubt about that. But you couple that, and I do expect gold price appreciation, and I do think gold is the one that actually gets back going up in a divergent capacity against the dollar. But when you look at it from a currency perspective, currency traders got to be getting excited right now to short the dollar, quite frankly. And when you're looking at the currency pairs, take a look at the euro dollar cross pair very quickly. When you're looking at the euro dollar cross pair, you're looking at a breakout scenario of the 1-2 level. When you're looking at it from a weekly perspective on the euro dollar chart, you obviously are expecting price appreciation. When you look at the British pound against the US dollar, no, please go to British pound, please.
Matt, talk about Pavlovian response. You started talking Forex and I'm like happy.
Well, it's just this is we don't see these setups in currency very often. We don't talk about currency very often, but when they do, they're really good trading environments.
They're so good.
And when you're looking at the pound dollar cross pair here, you're looking at a 134 handle that is very significant from a historical perspective. When you look at that on the weekly chart, you got to think about, okay, a breakout here does lead to more price appreciation. When you're looking at the currencies that are more commodity based, oil versus and the precious metals from the miners, when you're looking at the Australian dollar, the New Zealand dollar, and the Canadian dollar specifically, all three of those currencies are looking at bullish setups and bullish trends. And so, yes, I'm looking at the market like everybody else is today, but as an old reformed currency trader, that's always going to be part of my blood here. And when it does set up, these do get some really good trading environments. I know currency traders like Cody, they are all over this right now. Over. This is what they wait for.
Yeah.
They wait. You want to talk about patience as a trader? When we're talking about aggressive versus conservative confirmation, we're talking a day. Currency traders sometimes wait weeks and months for that trade setup, and we're starting to see it here from a short-term perspective. So I think the dollar breaking down, that chart is honestly, it's the one that nobody's going to talk about very much outside of just policy wonks and debt hawks and gold bugs. But outside of that, I do think that's the chart of the day in the market right now, is that dollar breakdown.
Mm-hmm. It absolutely is, and I hope my Forex students, because I know I got a tight niche group of tackle traders that trade Forex, and I hope they took a lot of the trade setups that I spoke about. One of which I did say on this show was NZD/JPY.
It's our highest ranked currency right now, is the New Zealand dollar.
Absolutely, it is. I called this one when it started turning, and it's continuing.
Yep.
This is beautiful. Now, here's something else. The New Zealand dollar and the Australian dollar have a very high correlation. So when one of them starts taking the lead, the other one may lag, and sometimes the Aussie, sometimes New Zealand. So if you didn't catch this one, go to the Australian dollar, Japanese yen cross pair. AUD JPY. Look at that one that hasn't broken yet. So if you missed the New Zealand dollar, there's a nice trigger set up here on the Aussie dollar, or the Aussie Japanese yen.
I love it.
This is how
honestly,
we trade. This is how we trade.
It's dollar and yen against everything else right now.
Yes, it is.
That's what it is.
Mm-hmm.
And we're on the yen side of that equation, guys. That's a scary thought. That's not a good thought we should be having, that we want our currency to behave like the Japanese yen.
No.
But as traders, we trade the patterns. And I love the way you said it, Matt. Like, if you want to be a Forex trader, you have to have patience, because Forex can be an extremely lucrative trading environment, but there's also times that it can be an extremely boring environment.
Well, and I'm specifically talking about swing trading there. Day trading currency, people love day trading.
Yeah. People love day trading, but like, as far as like swing trading, like Mark is zoned out. No one can see him on camera right now, but he's not even paying attention because we're talking currencies.
Hey,
shots fired right at the end of the
session.
I will get Mark's attention. I am here to listen.
Listen, I don't have it ready. I wasn't prepared.
What do you mean you weren't prepared? You said you had it ready yesterday.
So
I
some
don't
version of
this man's been doing nothing besides singing for a week straight.
I owe you a song. And it's to the most wonderful time of the year. Nice Christmas carol.
It's the most wonderful. Come on, let's hear
We
it.
got Riggins a Russian and Alex a passing. And listen, it's going to be a nice
Okay.
song for you, Emily. I don't have it like.
I like
in
it.
front of
I
me.
like it.
Got to
But I will-
start
Like it so
the
far.
concept here.
Got to have an Alex. Got to have an Alex Smith.
Oh, and I wrote a
Gotta have
second
an Alex Smith
song
one.
in honor of the Dallas Redskins game.
They're
Having
the
to do with
Washington football team.
Cowboys. Well, listen. old
How,
man,
how, give me some
Tim,
slack. Over under, how many years are we going to have to remind him of that? Is it a decade?
At least 10 years. Yeah.
Okay.
Yeah.
All right.
But to Ugly Kids Joe, everything I hate about you, with the Cowboys in mind. So I wrote you two
Oh, I
songs
like
over.
that. I like it.
I can't wait.
This is the gift that keeps on giving, Emily. It's like the the jelly of the month
Right.
club. You
I'm
just
gonna
get
say-
one all year long.
What was even better was Cody texting me during the game because he had our running back, and so he was like,
I
hating
did.
and loving it at the same time.
That kid had a great game.
Yeah. Gibson won me my fantasy games, but I'm sitting there watching us lose. And I actually had Gibson and Zeke. Zeke put up 3 points. Gibson put up 36. And it was like, well, he did the work. He did the work for two running backs.
And by the way, if you're out there and you don't know what we're talking about, Coach Emily and Coach Mark had a friendly little bet between the Washington football team and the Dallas Cowboys football game on Thanksgiving, and Emily cleaned house 41-16. Emily was drubbing.
Mark will never bet with you again for one specific reason. Do you want to hear what that reason is?
Right.
You remind him he lost. Me and Tim don't care enough to remember.
You'll come on talk trash for sure.
He's like, I'm never betting with Emily.
Hey, as a hard Cowboys fan, I will say we suck this season.
Yeah,
Cody,
Absolutely
obvious.
suck.
Cody, it only took
Like-
you a couple decades to realize that.
Couldn't
No,
you just
like
leave
a
off this season part? Just
It's
remove
like-
that.
It's like the
Cody.
coaching staff, the O-line, the D-line, the fact that we lost our quarterback. It's like everything is just
Cody, the last time they were actually good, you were 2 years old, bro.
calm down. I'm not that young. I remember.
No, that is
Calm
actually.
down.
ma-
No. I was
mathematically
legit.
correct.
I was legit on that one. Don't you?
No,
You wanna
that's
question my
mathematically
analysis on
correct.
this?
No, I
Cody, how old
remember
are you?
watching.
How old are you,
watching-
Cody?
Cody, how old are you?
How old are you?
You were
About to turn
20.
30.
Okay.
I'm about to turn 30.
So we're
So I
talking.
remember the Vikings Cowboys
I'm
Super Bowl. I
sorry.
remember
I should have gave
remember
it
some of these.
4
Okay.
more years. I
Calm
should have
down.
said when you were 6 instead of 2. It's
Oh,
okay. I'm a Dolphin
I
fan.
have
It's
words
okay.
for you that I can't say live.
But
Yeah.
those words wouldn't make sense when you're defending the Dallas Cowboys.
You can say whatever you want, bro.
Says the
You can say
Dolphins
words.
fan
Don't
that
die on
finally
this
got
hill.
a good season.
Mark is already the one under the target. You're now coming in like somehow joining this when Mark was the one taking some crap here today. So I don't know why you would open your mouth at all. All right, guys.
I'm defending my Cowboys.
Cody, you so deflected so much crap coming my way. I
It's
true.
appreciate that.
Ruined
That's
it,
true.
Cody.
Well, it's okay. I grew up in Dallas, so I have a reason to cheer for Dallas.
That
I'm
was
just gonna
very
let that one
logical.
simmer.
That's your
I'm just
big,
gonna let that one simmer.
That's the argument.
drop the
Well,
mic,
one of the
bro.
biggest things that people hate about Dallas fans is that they're everywhere, right? Well, I actually grew up in Dallas, so I'm not just a fan just because.
I grew up in Salt Lake. Nobody can ever come here ever.
The
This is
reason we
all mine.
dislike Dallas fans is not just because there's a lot of you. I can tell
So,
you. There
so
are
under
other
your
reasons. It's not
Cody, under your logic, I can't like the McRib unless I was born in a McDonald's.
No. That's
It-
not even a good analogy.
No, but
like-
it should be a true statement. Nobody should like the McRib unless you were literally born in a McDonald's with the McRib in your
But
head.
it got the laugh, Cody. Doesn't matter. It doesn't matter. It got the laugh.
Oh, I'm gonna enjoy singing "Ugly Kids Joe." Everything I hate
See-
about you about
see,
the Dallas
Cody-
song with extra passion now.
The saddest part about this whole thing is Cody was defending Mark.
He was.
Yeah.
He turned on me.
He turned
on
on
me.
Dude, you should learn you don't defend Mark.
Mark found his way.
He turned on me
Found
so
his
much.
way. Guys, that's our show
That's
here
it.
for today. We appreciate you guys as always. Noah's got that page up. We do have this offer going on, right now. If you're interested in our annual pro, our step system, go and visit tackletrading.com. Go to the store page. You can get any information you want. And like we know, you can email Mark and get some more clarity and a conversation there.
Well, and one last thought for the pro members out there that do this every single year, just email Mark. Mark will take care of you.
Yep, absolutely. All right, guys, we're done. We'll be back tomorrow, same day, different day, same time.